Hey everybody, it is Mark Coe for the 18th of October, Wednesday. Wanted to take you through a little bit of this levels thought process here. And I was thinking about it from the standpoint of building the correct approach to this and having a real process. So the way I always describe it, this process starts with a longer time frame. And I want to show you clear steps on how you do this. So I'm just going to use euro dollar as reference. So and understand what it is I'm building here. I'm building a bigger picture, bigger money sequence here, where I'm saying, look, the levels from a bigger picture level are going to be more meaningful than something I can find on a shorter term. So I have to define that right off the bat. I'll show you how I'm coming up with this level. So just visually, and this is how euro looked as it forms into it. You can see euro in an uptrend, and what you're looking for consolidation. So first things first, I'm trying to find consolidation areas. Then I want the bottom of that consolidation. I'm also going to find the top, but first things first, I want the bottom. Okay, so now I locate a bottom of a consolidation. What that means is it marked time. You can call it trading range. You can call it balance. You can call it consolidation. It all means the same thing, is that the market is no longer moving directionally one way or the other. It's going sideways. That's the first thing I want to mark. The second thing I want to mark is the top part of that. And so once I have those two things marked, I can work from something. Now that I have that marked, I'm going to show you how that plays out. So the top of it is violated, and you're going to be dynamic with it, which means you're going to find a new one as it continues to make highs and then eventually comes off. But the bottom, as you see, has not been violated. And what that means is it's now tradable. It's tradable. So here's the beauty of what we're doing with the levels. The market has shown us what it will do with this level. The market showed it to us. It showed it to us in July. It repeated it in August and is now doing the exact same thing in October. So talking about the steps I'm going through to get this, I'm taking a larger time frame. So in this case, I'm on a daily. I'm going to use this exact same level, 1670s to 1720s. It's the same 50 ticks you've been hearing me talk about on these videos for weeks. It's the same ones. They've been there for months. So now I'm going to show it to you on a 4-hour. And understand, I'm not building from a 5-minute chart and then going, I wonder if this is an interesting level. I'm building from a top-down approach, saying, get the level first and foremost from a bigger picture. Because you have to understand what is really moving markets. It's not a bunch of scalpers, day traders trading in and out, longs and shorts, both sides, that are moving the market. Think about those. Those are the kind of the feeder fish, the remoras of the market. And so the idea is that if you can build from these levels where you're really taking the money that moves the market, it's bigger money, it's actual directional money that's moving this market. That's what's moving it. That's what you're trying to key off of. So understand that level was put in late July, August. Right, so where am I talking about it being dealable? Well, I'm talking about it in late September being dealable. So what that means is using that exact same zone that I just marked on a daily chart. Now I'm just taking it down to a tighter time frame. I'm trying to get a little more dialed into entry. All right, so here it is. It's the same 50 ticks. It's not a different 50 ticks, because I'm not concerned about it a certain time frame. I'm concerned about the level, and this is the level. This is just the picture that the level's giving you when using a 4-hour versus a 1-day. It would give a slightly different look if you use 1 hour, because each of these candles, there would be 4. So the idea is that you're looking at this level. And here's how you're treating the level. You're treating it as support until it gives way. And the difference is that as you approach the bottom of this range, as you approach the bottom, and you're adhering to stops below it, nothing until you stop and close below it, but as you're adhering to that, as the price moves lower and lower and lower, all you're doing is lowering your risk while increasing your reward potential for any successful rotation, right? One rotation back to 120 is a successful rotation. As price is trading 1720 and you're thinking, okay, I have 50 to 70 ticks at risk here, that's true. but as it trades 1695, 1688, your risk is smaller and smaller and smaller. And so as you start to get rotation away, as you start to get rotation higher, and you're, again, continuing to look for levels, that's where your actual edge is created. So think about the process I go through. The process is I start with a longer time frame. I work my way down to dial in entry. And most people will still look at 4 hour and say, wow, that's really long. It's really not. Because you have to get away from this mentality of you're trading tick for tick. You have to start to understand you're trading levels. And so those levels can take, look in this case, this starts working this level the 27th of September. Here we are 18th of October. It's still flirting around this level. Still holding it, but still flirting around. That's weeks of trading. But understand what it looks like. It rotated from this level to this breakdown level. That was the rotation. So it traded 1700 to 1880, right? I mean, that's a good move. And you never had more than 50 to 60 ticks risk, even at the top part of it. At the bottom part of this white matter, you have a lot smaller risk. So keep that in mind. That's the process you want to go through to find these trades, because you have to be able to locate them. You have to be able to locate them to put yourself in that position, and then to be able to trade it from a position of strength. So for Wednesday, hope you guys are having a great week. Again, it's Mark Coe. I will talk to you guys soon. Cheers.